Okay, well, let's go ahead and get started. Good morning, everyone. My name is John Hagan. I'm chair of the Maine Climate Table. Welcome to the last of our 4 online events we posted this fall on the role of Maine's business community in helping solve the climate challenge. I know many of you have been with us for one or more of the previous sessions, but let me just recap a little bit what we've been doing and why we've been doing it. The Maine Climate Table, which is different from the council, believes it's important that everybody play a role in solving the climate problem, regardless of politics or cultural identity or socioeconomics. Our view is that it's going to take everyone. And Maine's private sector, the business sector, is going to be key to meeting the state's ambitious climate goals. We've had sessions on EVs, electric vehicles, large corporate climate strategy, workforce development, natural resources and climate change, and homegrown Maine businesses and how they're tackling climate change. So we've had a lot of great content over the last 3 weeks. We have more coming today. You can watch any of the previous events online. Just go to our website and they're readily available. As we know, businesses are really on the front lines of climate change every day. They have to solve all kinds of problems every single day. Climate is just another one of them. But with the panels this fall, we really wanted to focus on learning what's worked in the business community and maybe what hasn't worked and what we need to do differently to make things, to help them move faster on climate change. So today we have 3 items on our agenda. The first is a session from 10 to 11 is a panel that will explore how we might finance our climate future. We have a lot of changes we need to make and we need to figure out how to pay for them. The second session is just 15 minutes or so. Hannah Pingree is going to join us. She's co-chair of the Maine Climate Council, as most of you know, and she's just going to give us an update on the work of the council and a little bit of perspective on how she's thinking that the state can engage the business community as they move through with taking action on climate change. And third, we're going to bring back all of the moderators from the sessions we've had to date and just have a bit of a roundtable debriefing on the central messages that we've learned from the panel so far. So before I introduce Michael Stoddard, who's going to moderate our first panel, I encourage you to, you should have a Q&A button at the bottom of your Zoom panel. I encourage you to use that. Click on that at any point during the session and type in a question, and we'll come back to your questions for the last 15 minutes or so of the panel. So I guess that's all of the logistics. Let me go ahead and introduce Michael Stoddard. Michael, if you could turn on your camera, we can get you going. Good morning. Good to see you. Michael's an attorney and has been executive director of Efficiency Maine Trust since it began in 2010. Before that, from 2002 to 2010, Michael was senior counsel in Environment Northeast, now what we know as Acadia Center, and he's worked on everything. The list is too long, so I'm not going to go into everything, but electricity restructuring, energy codes, appliance standards. He knows energy and the subject of climate change. So Michael, we're really lucky to have you with us this morning. And I thought you might take a few minutes before you introduce the your panelists, just to help us frame up this topic. We know, I mean, we've all been, or many of us have been watching the Climate Council's work over the past, since January, or maybe late last year. And we know from the strategies that have come out, I was on one of the working groups, there's a lot of stuff we want. And maybe we can, and some of it's expensive. So we've got a lot of things we want. Probably can't have everything, but we got a challenge to figure out how We're going to pay for what we want. So if you could, and you've been in this business a long time, if you could help us understand the challenge before us, and then just introduce your panel and take off and running. And I'm going to step into the background. So thank you, Michael.
Thanks, John. And refresh my memory. Are we going to try to go till about 10? When do we want Hannah to jump in?
She's going to jump in at 11 sharp. So we've got up until that last minute to go. And again, I might jump in about 10:45 and say, hey, we've got a few questions. Michael could be. Okay, so
perfect.
That's the plan.
So I'll do my introduction from now until about 10:40, and I'll leave the panelists about 5 minutes to.
That'll work. If
Thanks so much for including me, John, and the Climate Table. Appreciate the work that you've been doing for quite some time now, and for this series that you've hosted over the last couple of months on really important topics. I had the privilege of not only being on the Maine Climate Council currently, but also serving as the co-chair of one of the 6 working groups that has been busy since about last October, talking through what should go into the plan. And that working group that I sat on was the buildings, infrastructure, and housing working group, which we just referred to as buildings for short. And then I also sat in on the energy working group and the transportation working group. And those 3 working groups primarily focused on what we refer to as the mitigation strategies, the things we could try to do to mitigate or reduce our greenhouse gas emissions and therefore reduce our risk overall of impacting climate change. And then there were 3 other working groups that focused on what is sometimes referred to as adaptation and resilience. So getting ready for the kinds of changes that we can foresee may arrive when there is increasing impact from climate change, as there is sure to be. So both of those sets of working groups, as you pointed out, John, came up with a slate of recommendations. And some of them are to change a policy here or there, or to start some kind of an educational program. But a lot of them involve taking steps that would require some kind of funds, some payment to do something that is going to require some funding. And so that's why I think this session today is timely and important, is to have more conversations about where those funds might come from. How can we finance some of these things that we'd like to do? For a little bit of context for the audience, I suspect most folks in the audience already have these ideas in mind, but let's just think a little bit about what it is that might require funding as it relates to these recommendations that are going to come from that are likely to come from the Maine Climate Council. First thing we all do is we look at where are the greenhouse gas emissions coming from, because that can focus our thinking on what we might do to try and mitigate those emissions. Just over half of all the state's greenhouse gas emissions are coming from transportation. So that's when we burn gasoline and diesel fuel in our cars and trucks and boats and other things that transport us. And so that's a really big target of our efforts. Just under 20% of our state's greenhouse gas emissions come from our homes. And there again, we're burning something that is resulting in those greenhouse gas emissions. So it's usually home heating oil or propane or natural gas or wood stoves, but whatever we have to burn there, that's for our heating, and that's generating about 20% of our state's greenhouse gas emissions. Then you have about another 10% for commercial buildings and about another 10% for industry and manufacturing plants. So those are the biggest sources. A smaller fraction is coming from the actual power generation, the things we burn, to the extent we are combusting natural gas or oil or some other some other fuel to make electricity, that's down around 7% of our state's greenhouse gas emissions. So all of those were the objects of discussion in these working groups about how can we try to reduce those greenhouse gases by 45% by 2030, and then all the way down to 80% reductions by 2050. And the things that we focused on are things that I think everyone is pretty familiar with. One is we want to build more renewable energy. We need to probably expand the electrical grid that brings that renewable energy to our door. We want to shift to cleaner heating systems. So we now are using furnaces and boilers that burn oil or propane or natural gas. We might want to shift to something that uses a cleaner fuel system or is more efficient. We want to shift to electric vehicles, and we want to weatherize our buildings. So on the mitigation side, that's the kinds of recommendations that are coming out of the Maine Climate Council. On the adaptation side, we were looking at building healthy and resilient communities and investing in climate-ready infrastructure. So we're looking at things like culverts and bridges and working waterfronts, doing things to make our water and sewer systems ready for severe weather events or for flooding events. So that's sort of the universe of things that the Maine Climate Council has been talking about. And you can really see that it runs the gamut from things you might put into your home to things you might do at a industrial manufacturer or even major public infrastructure. So I'd like to introduce the panelists and get us going on a discussion about where financing comes into play. The first panelist is Sara Lewis, who is the Director of Client Services at Spinnaker Trust. And I would ask all three of the panelists to turn on their videos, and we can do mics as well. Sara is the Director of Client Services at Spinnaker Trust, which is a wealth management firm founded in 2000. She, in addition to volunteering her expertise and time to a variety of organizations that support Maine families, women's health and wellness, and conservation in local communities, Sara is particularly interested in socially responsible investing and can talk to us about public markets and investing through that channel.
Thank you, Michael. Should I say a word?
No, hang on one second. Let me do a quick overview, and then I'm going to ask each of you to talk a little bit about what you do there.
Okay.
Bob Montgomery-Rice is President and CEO of Bangor Savings Bank, and that is a Maine-based bank that we all know and love here in our state. Bangor Savings contributes to the strength and health of our communities through the Bangor Savings Bank Foundation, which has done a lot of work that touches on some of the things we've been talking about or will talk about in connection with the recommendations of the Climate Council. So they've done philanthropic efforts, and they have a really meaningful impact on workforce development and sustainable economic growth through that foundation. So that's something we'd love to hear more about. Steve Clemmer is the Director of Energy Research and Analysis for the Union of Concerned Scientists Climate and Energy Program. Steve also currently serves as the Technical Review Committee of the National Renewable Energy Lab's Electrification Futures Study, a topic which is near and dear to my heart since we're so focused on heat pumps and heat pump water heaters and electric vehicles at Efficiency Maine. So I think that's a fascinating area. I'm going to forego giving you the bio for each of these folks, and now Sara, I think it would be great if we could just go Sara, Bob, and Steve. Could you just take a couple minutes, introduce yourself and your organization, and anything you want to say as an introductory point to get us going here. Sara.
Sure. Thank you. Glad to be here. Look forward to this conversation this morning. I started my career back in 1981 at Merrill Lynch in New York City. When the Dow was at 1,000, a long time ago. We've come a long way, and we've come a very long way with socially responsible investing. So I look forward to sort of talking about that and why we feel at Spinnaker that we're sort of at a tipping point here that I think is important. I've been with Spinnaker since we opened the doors 20 years ago, and we've built it from 5 people to about 35 people. We manage money mostly for individuals and families, but for some foundations and endowment funds. And we manage about $2 billion now. One of the ones that I will be talking about a little bit is Unity College. We helped them be the first endowment fund in the country to be fossil fuel free. So that was pretty exciting to work on. So I look forward to talking a little bit about that. At Spinnaker, I've worn a ton of different hats over the last 20 years, but now have many, many clients of my own, and working with everyone at Spinnaker to make sure we give all of our clients a terrific experience. And a lot of that now is this socially responsible investing. It's not in the backseat. It's not a small part of what we do. It's become what everybody wants to do.
Thanks, Sara. Bob, give us
Hi.
a quick intro.
Hey, Mike, how you doing? Bob Montgomery-Rice, Bangor Savings Bank, President and CEO. I've been with the bank now almost 17 years. My foray into climate and renewable energies actually goes back to the days of Jimmy Carter, when he put a solar panel on the White House. My dad put one on his business, and he was in the oil business. So it was pretty odd back then to see an oil business with a solar panel heating hot water. But earlier in my career as the COO of the bank, we started dramatically changing how we approach energy at the bank, to the point where, we did and took care of all the lighting. And if you don't know, we've got over 70 buildings, so our footprint is large. Some of them are like houses, and some of them are big office buildings. Our latest project is in our new campus up in Bangor, which is a 150,000 square foot campus. We've added a 1,500 panel solar roof to our garage that takes care of almost all of, in combination with the geothermal field, takes care of most of our energy needs. And we have a large data center there that, as you know, data centers tend to be big energy hogs. And so in the end, we think that it's important, not only in Maine, but across northern New England, that we need to be responsible and good corporate citizens. And also, I will tell you, as a bank and someone who's into the numbers, now it makes financial sense for us to do it. And I think it does for a lot of businesses. Especially if you've got a slightly longer view than the month end or the quarter end, these things not only make sense environmentally, but they make sense financially. So I can talk a lot more about that, but that's a little bit about myself, the bank, and we'll talk more.
Thanks, Bob. Steve, give us a quick intro to your position at UCS and what you've been working on that's relevant to this.
Thanks, Michael, and good morning to everyone. And thanks to John for inviting me to be on this panel. So I've been at the Union of Concerned Scientists for 23 years, and I'm the Director of Energy Research and Analysis, as Michael suggested. Most of my work involves overseeing our research and analysis, primarily focused on the electricity sector. But as Michael indicated, I've also been doing more work around deep decarbonization economy-wide, as well as looking at electrification of other sectors of the economy, which is a key strategy for decarbonization, not just in Maine, but everywhere around the country and the world. For folks that don't know, aren't familiar with UCS, we're the nation's leading science-based nonprofit organization with more than 500,000 supporters. And that includes 2,700 in Maine. Our mission is to put rigorous independent science to work to solve our planet's most pressing problems. And we do that by joining with people across the country, combining technical analysis and effective advocacy to create innovative, practical solutions for a more healthy and sustainable future. I also just wanted to quickly mention, I was a member of the Energy Working Group on the Maine Climate Council, along with Michael. Thanks.
Thanks, Steve. So we're having a panel today about financing and thinking about this from the perspective of the business community. When I think about that, I think about not only what Bob was saying a minute ago, which is how do businesses take care of their own housekeeping in terms of reducing their carbon footprint, reducing their energy costs, doing the things that they can do to be a good corporate citizen and help mitigate our emissions, but also as business, taking advantage of business opportunities. Where are there opportunities to make a buck, to make a profit selling a product or a service, or providing financing, providing investment where it's going to be needed. I thought, Steve, we might start by having you touch on a couple of the things that come to your mind from having sat through those working group meetings about where there will be, where will there be financing opportunities and needs in the future, in the next 10 years in Maine, that are related to the kinds of things that were coming out of those discussions. Can you talk a little bit about what you saw in that emerging climate action plan that hasn't been finalized, hasn't been fully written yet, but is under discussion, and just give the audience a flavor of the kinds of things and maybe some of the order of magnitude of the financing that we think will be needed?
Sure. Yeah. To answer this question, I think I'd like to start just kind of with the big picture. To achieve the state's climate and clean energy goals, recent studies have shown that Maine will need to invest on the order of $40 to $50 billion over the next 30 years. So about $1.5 billion per year. The good news is that these clean energy investments could be paid for simply by redirecting a portion of the $4.4 billion Maine currently spends on imported fossil fuels each year, and those imported fossil fuels are what's driving our emissions, and in doing so can create jobs and lower energy bills for all Mainers. It's also important to put these costs into context with the much higher costs of climate impacts if we don't make these investments. And some of the costs of inaction have been estimated in the Eastern Resources Group reports that they did for the Maine Climate Council. I'm not going to go into details there, but there's a lot of details in those reports if you want to see them. So to drill down a little into a little bit more detail, these clean energy investments are going to be needed in all sectors of Maine's economy. As Michael had said, switching from oil to low carbon electricity in transportation and buildings is one of the key strategies for achieving the emission reduction targets. And so this is going to involve consumer investments in electric vehicles, heat pumps for space and water heating and air conditioning, rooftop solar, more efficient buildings, appliances, and cars. So each of these investments will have upfront costs ranging from the thousands of dollars to the tens of thousands of dollars for homeowners and consumers. To put this into perspective of how much we have to do, so Maine has a goal of installing 100,000 heat pumps by 2025 and weatherizing 100% of homes and 50% of businesses by 2030. One of the analyses that was done for the Maine Climate Council by Synapse Energy Economics assumed that we would need to go from 100,000 heat pumps in 2025 to 260,000 by 2030 and 480,000 by 2050, which would represent 90% of all households and all commercial buildings having heat pumps by 2050. They also projected that 90% of the light-duty vehicles and 80% of the medium and heavy-duty vehicles in Maine would have to be electric by 2050. So huge challenges to achieve those types of targets, fundamental transformation of our energy system to do that. There's also obviously things that would be needed in the commercial and industrial sectors. I'm not going to go into the details there, but Michael, you can maybe speak more to this after I'm done. But I think that what I saw from the average cost of Efficiency Maine's programs, the C&I program, the custom program is about more than $100,000 per project that has been invested in those sectors. It's also important, the electricity sector is vitally important in this transition. We're going to need to make significant new investments in utility scale solar, onshore and offshore wind, and energy storage projects to meet Maine's renewable electricity standard, which is one of the most ambitious in the country. Again, the good news there is that the cost of these technologies has fallen by more than 70 to 80% over the past decade, making them more competitive with investments in new natural gas power plants. Also important is investments in grid infrastructure and charging stations that will be needed to increase electrification in other sectors. And these investments in the electricity sector are going to range in the hundreds of millions of dollars to the billions of dollars, as we're seeing with the transmission line project that we've heard so much about over the past couple of years. Just one last point, the companies that are going to be making the utility scale investments already have access to capital. However, tapping into lower cost sources of capital and reducing reliance on high cost tax equity financing could result in significantly lower cost to consumers. So I'll stop there, Michael, and be happy if you added anything that I might have not covered.
I think that covers the waterfront, Steve. That's really what I was hoping for, at least for the audience's sake, to get a flavor. We're talking about everything, a heat pump you can buy for $3,500, $4,000, something like that. If you wanted to convert your entire house to heat pumps, you're probably looking at something between $10,000 and $20,000. So that's the scale of that kind of a carbon strategy. And then you have things all the way up to, giant power plants and grid transmission lines that, as you say, are measured in the billions of dollars. And I do want to hear from Sara and Bob a little bit about their perspective on from their sector of the industry, how that financing works. I will just point out, though, that Mainers buy these things. They buy things every year. Like we do invest in, my boiler in my basement isn't going to last forever. One of these days it's going to reach the end of its life, and I was going to have to pay for that thing anyway. So I don't want to make it sound like all of these costs are incremental necessarily to what would have otherwise happened. But I don't think all of this needs to be on the back of climate change per se. These are investments we're making, and our cars get to the end of their life and we trade them in and we get a new car. So some of these things won't necessarily be an incremental cost over what would have happened. Some of them will, for sure. But in any case, the question, that's sort of irrelevant. The question is, how do we pay for this stuff? How do we get it done so that financing isn't a barrier to people making smart purchasing choices and smart investments? Let's kick this over to Sara and Bob a little for their perspective. Sara, we hear that there's an enormous amount of capital out there from private investors, everything from large pension funds to individual investors. Can you talk about socially responsible investments? Is this something that's growing? Is this something that's going to provide capital that could be helpful for some of what Maine is facing?
So this is playing out on Wall Street as well as in your basement. From socially responsible or values-based investing has been out there for a long time, even back in the 80s when people were trying to divest from South Africa because of apartheid. It's been out there for a long time in one form or another. It was then, I don't want to own tobacco or alcohol, sort of the sin stocks. And then recently, really in the last 10 years, you did start to talk about people wanting fossil fuel-free portfolios. As I mentioned earlier, Unity was on the forefront of that, and we helped them build a fossil fuel-free portfolio, and we now have many clients who've been in that, and frankly, it's been fantastic. Energy has been the worst performing sector on the S&P 500 for the last 10 years, and is now less than 2% of the S&P 500. It's gone from 15% of the S&P 500 to 2%. So it's playing out in portfolios as well. What we're seeing now is something called ESG investing. This is the new lingo. And it's, I'm going to share my screen just for a minute. I've got a couple of slides to look at this. So ESG is talking about environmental, social, and governance. So there are companies out there now rating publicly traded companies based on these three different factors. How are they working with their own energy use and natural resources? How are they on the S side with their employees? Do they have good labor standards? Is it good healthcare? And then governance, are they diversified? Is it transparent? So you now have several companies out there, MSCI, there's a company called Sustainalytics that are rating publicly traded companies around the globe based on these three factors. And more people want to be invested in companies that are doing the right thing, that are moving in the right direction. And it used to be that you felt like you had to give something up. And I've been on boards and presented to boards saying, you know, fossil fuel free is not really giving anything up. You're not going to lose performance. It's not going to be the same year to year. But we really believe that you don't have to give anything up anymore to be a values-based investor. This is a quick chart looking at the last 5 years of the S&P 500 in blue versus a basket of stocks that are screened for the highest rated ESG companies over the last 5 years. They've actually done a little bit better. They've done quite a bit better this year. As people learn more about it, here's the equity flows into ESG labeled, this is mutual funds this year. All equity mutual funds are actually down year to date, but money is moving into ESG funds. So what does that mean if you're a company in the S&P 500? You want to be part of this. So these larger companies are figuring out ways to get rated well in these ESG scoring metrics so that they can be part of this. So these companies are shifting and changing and becoming, we think, better run companies in order to be part of this wave. There's certainly the next generation of investors is going to insist on this, we believe. So we've made it, the same thing is happening in fixed income, just a quick slide on that. Money has been going into fixed income this year, but a huge amount has been going into ESG, fixed income. And you're seeing this all over. ESG investing trends are huge, and climate is really the #1 issue that people are talking about around ESG investing. The coronavirus has only brought that into more focus, that people are really looking at how companies are running themselves. Lastly, not surprisingly, our current administration is actually trying to slow this down, which is just kind of amazing. They're trying to keep 401ks from being able to use, have a choice of ESG funds in their portfolios. It doesn't really make any sense, but I'll leave my slides there. But what we're seeing is people are demanding this now. They want companies to be thinking about this kind of thing, even the big companies in their portfolios. So values-based investing is really becoming the norm now for many people. And as we rolled this out just anecdotally for our clients, and with the volatility we had earlier in this year, we were able to move portfolios much more into ESG because you could take some losses back in March and April and roll into these higher quality, either mutual funds or exchange traded funds or however you want to do it. And people have been thrilled with it. So it really is the way that people are thinking about how companies should be run.
Thanks, Sara. Bob, let's talk a little bit about the services that Bangor Savings offers. I think you touched on a little bit about how you've seen the evolution in Maine and particularly through Bangor Savings in terms of their readiness, their facility with providing financing for the different kinds of projects that your commercial clients are looking for. Can you talk more about that? And I don't mean to limit it to commercial. If you want to talk about residential too, that would be great. But I know part of what Steve and I wrestle with is barriers to financing. Where's the friction? Is it that interest rates are too high? Is it that there's not enough capital available? Is it that the credit creditworthiness standards the underwriting standards are unreachable for too many of us or for certain populations? So give us a little flavor of, and I left out one of the things that had been a long running concern is that there's something about the kinds of projects that we're talking about here, like solar on the rooftop, or maybe something with heating systems, or maybe for a commercial customer, some kind of energy system or some other kind of part of their equipment that maybe the commercial lending industry just wasn't familiar with, and they didn't want to mess with it because it was unfamiliar territory. It sounds to me like what you're saying is that we've come a long way, but tell us a little bit about how you're seeing your bank's efforts in this area, and A, how it's changed, and B, are there still some barriers out there that you see that we should be focusing on or trying to continue to smooth those out?
Yep, absolutely. And I would break it into three different segments. You've got the commercial, straight up commercial business doing other things, and then how do you help them with their systems, of course, residential. And then there's more about the large scale power kind of stuff. And so first in the commercial, I think that's moved the most and the fastest. Mainly, the costs have come down, and since most commercial credits are really looked at from a cash flow and asset standpoint, that's gotten better and better to do. The industry's gotten better at understanding it, and so we've seen a lot of progress in that arena and finance multiple projects, or if a business wants to change. And usually it's when the opportunity arises. They've got an old system or some kind of, and they want to change things out. That's where the opportunity is on the commercial side. And now there's still more to go. Usually it is the weaker credit, or they don't have the right cash flow to make that work. But those are less and less issues on the commercial side now. When it comes to residential, that too has had quite a bit change. First, cost is the number one driver that has really helped that. Now homeowners can recoup much faster. The other thing that was a barrier was the appraisal system. How do they understand and appraise for these different kinds of systems? And it didn't have a way to assign value. Now it does, and it can do a much better job, especially on the solar side of appraising that. And then the other big change is now that Fannie and Freddie has now acknowledged and allows value to be given into a property when it comes to their solar system. That has changed things dramatically since, Fannie and Freddie back most of the mortgages in the country, as well as in Maine. And so that has really made a big impact. Now there's a barrier there and you touched on it, which is if there's not enough value when someone's doing their replacement, or their credit quality is really weak, that's where then when banks traditionally have the most trouble taking the risk. And I think that's where we still have work to be done. And if we can make that progress, which, if you look at Maine's housing stock, there's a great opportunity there. It will improve the cash flow of the individual and so forth. But usually credit, the house value is just not there to do that. So as we think about problems, how does it fit into the underwriting as well as the guarantee side of that credit? Then lastly, we have gotten ourselves involved on the large scale power side of them, usually in the form of bridge financing. to help somebody start a project or be involved or making the transition. Other larger players in the country get then involved and usually some kind of takeout. And then we as a bank have actually been involved in purchasing power, doing power agreements with those larger kind of projects. So it's both ends of that piece. But I would say the biggest remaining is whether it's a business or an individual, how do we help them if they have poor credit or there's just not enough economic value left in whatever the project or their property. But I would say the last 5 to 10 years, big movement, and especially in this last 5, and it makes me very encouraged about the next 5.
And Bob, is there any issue with just availability of credit? Like when I first started this job, it was right as the Great Recession was starting, and literally availability of capital was an issue. It's not my impression that that's an issue now, right? So
that's not
more about creditworthiness and risk, and affordability of these things. I guess my impression is that the price of money, i.e. the interest rates that people pay are at historic lows. So is that a fair statement?
It's a fair statement. So there's access, there's capital. Their prices, whether it's the price of the actual good or the price of the borrowing is way down. So all of those affordability factors there, it's really that last piece about value and credit quality. But so we don't have the issues of 08 today. There is capital there. There is the ability to lend. And banks are even lending as we are moving through this pandemic. And this is an interesting time to try to be figuring out how to do that. But I don't see those issues today.
Steve, you've brought up on some other forums that I was in this idea of a green bank for Maine, and we've seen some examples of green banks in other states that have seemed to be quite successful. Can you talk a little bit about what that concept is and what it might accomplish in Maine?
Yeah, I think, green banks have emerged in other states to help address some of the barriers that Bob's talking about, as well as to try to reduce some of the risks that he was mentioning. So green banks they're mission-driven institutions that use innovative financing mechanisms to help transition to clean energy and to fight climate change. I think one of the key aspects of them is that instead of relying on one-time grants and rebates like a lot of state energy programs have done historically, green banks use limited public sector funds to leverage a much larger pool of private sector capital. And they do this through a suite of financial products and tools. So by returning some of the payments from the loans and other products back to the bank, they can actually create a self-sustaining funding mechanism for many years into the future. They also work with local stakeholders to understand local market gaps and barriers, as well as to raise capital and deploy solutions to fill those gaps. Currently, there's green banks that are operating in 9 states, plus the District of Columbia, and they're under consideration in 7 more states. And to date, green banks have driven more than $5 billion in cumulative investment in the United States and about $50 billion globally, according to the Coalition for Green Capital. And then, I think some of the programs that are in the region, New York, Connecticut, and Rhode Island have all implemented very successful green bank programs. These programs have achieved leverage ratios of about $5 in private funds for every $1 of public funds that are being invested. And some of the products that the green banks cover would include things like credit enhancements, warehousing and securitization of loans and services, direct lending, underwriting support, and they also provide technical expertise on the different technologies and solutions that some of the banks and financial community might not have as much familiarity with. I think, from my perspective, I think it's most effective to target green banks at populations and sectors that have more limited access to capital. So that would include things like homeowners and renters, small businesses, institutions, and maybe even local governments. And one final point, I think it's important to design green banks in a way that are equitable and provide benefits to all residents, including low-income households, but also disadvantaged communities, and in Maine in particular, rural areas. And there are lots of really good examples out there of how green banks have developed efficiency and renewable energy programs that provide grants or low or zero interest loans to low and moderate income households and owners of multifamily and public housing. And I know that Efficiency Maine has some programs like that as well. So I'd be happy to answer more questions about a green bank, but let me stop there and see if there's any other questions. Thanks.
Thanks, Steve. Sarah, just want to give you a chance to chime in here, and then I think we ought to try to see if we can pick up a couple of these questions that are coming in through the Q&A. But do you see, just pick up on this conversation a little bit about barriers, like things that maybe need something to grease the skids a little bit because there's something more challenging about getting the financing through to that sector or to that kind of product or service. I mean, do you see that some of the kinds of socially responsible investment companies, the ones that you're talking about being more attractive, is there something, do you see them doing things in this area that would help address some of these barriers? Or do you think that these barriers are there's barriers we should be aware of that apply to them as well?
Well, I think what we're seeing is that large corporate America wants to be, on the good side of all of this and wants to try and take down some of these barriers for investors, for their employees, all across the board to make things more equitable. So I think we're seeing that it just becomes it's the right thing to do, but it also makes economic sense, as has been mentioned here before, to start to do the right thing. So I think you're seeing a lot more leadership in corporate America, certainly than we're seeing out of Washington right now on many of these topics, because it's what people actually want to do on the ground. I think the green bank idea is fantastic. It seems like a natural for Maine to want to do something like that. So I think corporate America actually is leading the way in many ways on some of these issues, much more than we're seeing in policy, at least right now.
Thanks.
Some editorial comments.
I want to shift to a couple of the comments that are coming in through the Q&A. One of them was about carbon pricing. I'll maybe start with Steve on this, applying some kind of a charge where carbon comes from. So you might place it might take the form of a tax, like a carbon tax, or you might have some kind of a limit, a regulation that limits the amount of carbon and requires people to purchase allowances to emit carbon, like a permitting requirement. And either way, it generates a bit of a funding stream. It generates a revenue stream. One of the questioners asks, would that be relevant here? Is that something that could be helpful to address some of these financing needs? Steve, do you want to just take a second to talk about that?
Yeah, sure. There was a very active discussion about carbon pricing in the Energy Working Group, and I think it's safe to say that there was pretty broad support among the group that carbon pricing is a good idea, and in doing so, it also creates a source of revenue that you can use for financing to offset impacts on low-income customers and things like that. There was a sense that Maine doing this on their own was not probably the best approach, but rather more of a regional or national approach would be better to avoid any kinds of competitive impacts or leakage that could happen to other states. But Maine is part of the Regional Greenhouse Gas Initiative for the electricity sector that does have a price on carbon emissions from the electricity sector, and some of those revenues, I think, go to your organization, Michael, to implement some of your programs. And so there is a regional process set up in place already for the electricity sector. I think there's also discussion underway as part of the regional transportation climate initiative too, to do something like that in the transportation sector. So I do think it's a very promising way to address some of these issues, but there's obviously some political hurdles that would need to be overcome to get it put in place.
Yeah, thanks, Steve. I mean, I can certainly say that we have a form of this, as Steve was just referencing, in the Regional Greenhouse Gas Initiative, which we've been running for 10 years now. It turns out the sky did not fall. And for a pretty modest price impact on electricity now, all of the power plant generators in the Northeast pay a small price to purchase permits that allow them to emit carbon. And those funds are being reinvested for in different states are doing it different ways. In Maine, we have the legislature has directed that 100% of the revenues from that get redeployed to help invest in these kinds of projects we've been talking about. So we've used them for heat pumps for low-income customers and weatherization for low-income customers, trying to target folks that are facing particular barriers. Small businesses now are able to get a heat pump with a pretty significant rebate on that, and we're funding that with the RGGI revenues. And we've also used those revenues to particularly good effect to invest in fuel switching projects and energy conservation projects at some of the state's biggest manufacturers. So the paper mills, the hospitals, the universities where they have really big boilers. We've used RGGI dollars to do that. So it's kind of a win-win. It's helping those entities lower their operating costs, their energy costs, and also helping to cut our greenhouse gas emissions. So it's nice in that way. So, Bob, we talked a little bit about green banks. I mean, do you feel that some of the things you heard Steve talking about are those things that your bank and other banks in Maine you think are situated to do some of those things?
There are some of them that we can do. There are some that we still have regulatory hurdles to overcome, especially on the credit and quality side of things, and that's the thing that we keep pushing back on. And how does it fit in the lending stack and guarantees? And it's around risk, and that's where that piece is. And I do think we've made progress. I think there's more progress to be had. And banks, credit unions, anyone providing this kind of financing is faced with that when it's worried about something going wrong.
Yeah, well, as one of the guys that gets sometimes assigned these policies from the legislature, I'm very sympathetic to that, because I think sometimes the policymakers think, well, we have to address this barrier. So, and I keep saying, the risk is still here. Are you guys going to have my back if we lose these funds because people don't pay them back? Because that's the nature of lending. Sometimes folks can't pay you back. So you have to be okay with that. I'll do it if you assign it to us. I just want to be clear that you're going to have my back if some of the loans go belly up. But there's reasons that you guys have these limitations, I think. Let's quickly check to some of these other questions. There's a kind of a tricky one. I'm not sure we're the best group to answer it, but I'll just point out that two different folks pointed to Maine's natural lands and forests and their ability to sequester carbon. First of all, to the first question, I want to acknowledge that there was a good deal of time spent in the working groups at the Maine Climate Council talking about that. Just because Steve and I didn't bring it up doesn't mean it wasn't discussed. And there's been quite a bit of work in Maine done on this issue over the last 20 years. So we have some national experts on the topic, and we have some land management, forest management companies that have thought a lot about this and are doing a lot of pretty creative things, I think. I'm not sure, Sara, are you familiar with some of the more socially responsible businesses that you would find as targets of your investing strategies who have involvement in forest products? You know, do you see people who are, do you see some of those investors looking for, you know, socially responsible forest management as part of their portfolio?
Yeah, you know, I haven't heard that specifically, so I have not seen that specifically. I think people are trying to, you know, vote with their investment dollars as much as they can. I haven't heard that specific of a target.
Thanks. Yeah, I'm afraid I don't really have a whole lot to offer to it either, to that topic, other than to note that you know, we're fortunate in a way that we do have well-forested lands, and that they're generally quite responsibly managed, and that's a resource for this state and will continue to be into the future. So it will play a role. Another questioner brought up a question about coverage in areas that are potentially impacted by high sea level rise, and that and points out that insurers are leaving certain markets like California, maybe Florida, that are in low-lying areas, and they're asking, will this affect financing and insuring residential commercial markets in Maine? Would we expect to see insurance rates rise as a result of this, and will this impact local financing for for communities that are impacted by that? Bob, maybe that's a question for you. What do you think we should expect to see in regard to that?
So this is a new and emerging trend in financing, is that we're having to evaluate a climate risk. And so you see it first in the areas with greatest risk. So if you think about California, the West Coast, the fire zones, the Gulf Coast, where you see hurricanes and floods and so forth. One, you're seeing insurance climb in cost, but also we as lenders are being asked to, and this is new, so I don't have a lot to add here, but it is going to develop over the next couple of years, is as a lender, what is that risk if someone is in a high climate impact zone? You know, and I'm just coining a term there, but it is a new thing where, you know, the big banks are being asked to evaluate and contemplate, and it'll move in our direction. You know, and you can see it in flood insurance costs going up. So if you think about this from a trend perspective, it's probably going to find its way into a lot more things, and it'll find its way to Maine, where we have the different risks, whether it's on, you know, on a body of water or what have you. So this is definitely an emerging trend that has my attention, and from a risk standpoint, watching it.
I would add that it's also affecting the municipal bond market. And you're starting to see that, you know, do you want to buy a municipal bond based on, you know, properties in low-lying areas in Miami?
Yep.
You know, if you're Miami, you're going to have to start paying higher interest rates because it's a much bigger risk. So Miami, New Orleans, you know, Houston, whatever, wherever it is, those municipal bonds are starting to get much more expensive for those towns to issue.
Santa Rosa, Paradise City, all those kind of places. And so
all the more reason that Maine's municipalities would want to take some of these recommendations coming out of the Maine Climate Council about building in resilience into their planning and their infrastructure, their water, sewer treatment, et cetera, so that if they do want to issue bonds, they're a more attractive candidate and can get a better interest rate. That's interesting. We have reached... Yeah, go ahead.
I would just add that UCS has done a lot of analysis around risk from sea level rise. We actually did a report a year or two ago that has a very, working with Zillow actually, that does a really very detailed assessment of the risk to homeowners up and down the eastern seaboard and Gulf Coast. You can actually zoom into the zip code level to see what the risk is and potential value of the properties that are at risk. I'd encourage people to look at that. And finally, we've also done a lot of work around trying to ensure that there's funding for the National Flood Insurance Risk Program, which has been underfunded. And you know, there's more on our website there. So I'll in the interest of time, we'll cut it short there.
Thanks, Steve. That sounds like a great resource. Well, we've come to the end of our hour, and I want to thank the panelists. Thank you, Sarah and Bob and Steve, so
Thank
much
you.
for joining us.
Thank you.
And I imagine that we've just scratched the surface, piqued people's interest. So I hope that folks in the audience who maybe have a follow-up question will feel free to either reach out to the panelists directly or contact John or Katie and get their contact information if they don't already have it. And feel free to follow up with a question. This is the part where we would, have to take a break for the thunderous applause that would be following your panel. You're just going to have to imagine it, squint your eyes and imagine it. I'm afraid I don't have a button that I can push like at Foxborough with a canned applause. But thank you for a great job and for joining us this morning. And let's turn it back to John and Katie.
Well, thank you all. Thank you, Michael. The only problem is I've got 2 pages of questions left, and there's no time. I have to keep us. So anyway, that was fascinating, and maybe I'll follow up with my questions later. But that was great. So we're gonna take no offense. We're going to demote you all to attendees, and we're going to promote Hannah Pingree to a panelist so that she can share her screen. So thank you all, and I hope you'll stay on and hear what Hannah has to say. Thank you, Michael. See you guys later. Let me just check in with Katie. Katie, is Hannah somewhere in the Zoom universe and accessible to us?
Yep, she is. She's
Okay.
just been promoted to panelist.
Okay, there she is. Okay, good morning, Hannah. Let me do a quick introduction of you. Hannah's Director of the Governor's Office of Policy, Innovation, and the Future. That's a lot of syllables you've got there, Hannah. GoPIF is what I guess a lot of people call it. But Hannah is also co-chair of the Maine Climate Council, different from the climate table, co-chair with Melanie Loizim of DEP. And Hannah's been in public service for quite a while. She served 4 terms in the state legislature from 2002 to 2010, including being Speaker of the House. And my, Hannah, just so you know, my goal with this whole series of events this fall was to get to know my 2 favorite Maine celebrities, Adam Lee and Hannah Pingree. So I'm good now. But I know you from Maine Watch and of course MPBN for many years, and of course Adam too. But I thought, as you know, our purpose with this fall series was to give the business community an opportunity to take the stage and tell us what they're doing, what they're thinking about climate change, because, as we all know, we can't do this without the leadership and participation of the business community. So thank you for being here today and taking some time to bring us up to speed on the incredible work of the Maine Climate Council. I have no idea how you guys are doing this in the middle of a pandemic. I was on the Coastal and Marine Working Group, and I saw how hard everybody was working to get this, to keep this on schedule. So if you could just take a few minutes to bring us up to speed on that work and the December target date, and also how you're seeing the role of the business community in these wonderful goals that the state has set forth. And I know you've got a few slides, so you can share your screen or we can share it for you. But
Great.
I'm just going to turn the podium over to you right now.
Great. Well, thank you so much, John, for organizing this. Huge thanks also to Kathy Lee, who's been a sort of great climate activist for so long and really a good mentor to me in I know really leading on the climate table work. So I've been following the panels and haven't been able to attend them all, but I would say it's incredibly valuable work that you've done. It's inspiring to hear what Maine businesses are already doing, their ambition to do more. And so that's a little bit of what I'm going to talk about today. I'm just going to attempt to share my screen here real quick and start a slideshow. All right, assuming you can see that. Yes, John?
Yes, we can
all
see
good.
it.
All good.
All right, good, good. Well, I'm going to talk, John asked me to talk a little bit about just the quick overview of the Maine Climate Council and our goals, and then talk about how the business community has already been engaged, our need for ongoing engagement of the business community. And I think I would just say, like, crucial to all climate work, we can't take climate action without the participation of Maine's businesses, Maine's communities, and Maine's people. So there's really, there's no progress without that level of partnership. And I think that, as you just heard in the previous panel, I think Maine businesses and people are incredibly eager to take action. They know that not taking action actually presents a risk to our economy and our resilience going forward. And I think there's so many comparisons with what we're seeing in the COVID epidemic and climate. We know that large-scale disruptions, whether from climate change, wildfires, hurricanes, or a pandemic, present incredibly challenging economic circumstances. So the more that we can plan for them, avoid them, prepare for them in our communities and businesses, the more likely we are to be economically successful. I think the other major point, which I'm going to talk about a little bit, especially at the end, is that responding to climate action, and especially in a state like Maine, with incredible natural resources, huge forest product sector, forests, opportunities like offshore wind, can grow thousands of good paying jobs in Maine. So to take climate action is actually to help create a robust and growing Maine economy. And we also know to take action for many Maine businesses increases efficiency, increases workplace health. So the opportunities in many ways can be a win-win. So I'm just going to quickly go a little bit through how is Maine tackling climate change. So I just would say from the start of Governor Mills' administration, she has made climate and clean energy growth in Maine one of her top goals. This is just a quick screen of some of the things that we've done, and I'm going to talk mostly about the actions of the Maine Climate Council, but many of the actions on this screen are sort of parts of that picture. Maine signed, the governor signed a renewable portfolio standard bill requiring that 80% of the state's energy be renewable by 2030. One of the most aggressive renewable portfolio standards in the country, and already leading to just a huge growth in the renewable energy. Maine just saw its largest procurement of clean power this past month, and we will see continued growth in the next 10 years. I'm sure that Michael Stoddard just talked about it in the last panel, but we passed a law with his leadership to implement 100,000 new heat pumps in Maine, mostly in the residential sector, focused on low and moderate income Mainers, but really to encourage the transition to beneficial electrification across the state. We've been spending the VW settlement money to increase charging infrastructure for electric vehicles across the state. Again, a program actually being led by the Efficiency Maine Trust, one of our key partner to a lot of the exciting climate action work. Maine was the 22nd state to join the U.S. Climate Alliance, a bipartisan coalition of 25 U.S. states committed to meeting the Paris climate goals when President Trump pulled the U.S. out of Paris. Now 25 states have stepped up. Those 25 states represent the majority of the U.S. populations, a larger part of the U.S. economic sector, and also the part of the economy that is growing fastest. So we know that when you take climate action, it doesn't mean that growth needs to come at its risk. A number of other actions, I won't go through them all, but the governor has been really focused on how from day one do we start taking action. One of her most significant actions was to set forth emissions reductions targets for our state, and a group tasked with coming up with that plan, and that is the Maine Climate Council. So our plan is due. We are right in the final throes of more than a year of hard work. Folks like John worked in our many working groups to come up with solutions and proposals. The 39 members of the Maine Climate Council are now deliberating on those proposals, and by December 1, we have to deliver a 4-year climate action plan to the governor and legislature and people of Maine. And that plan has sort of three goals. One, the governor set out actually in front of the United Nations this last September, a executive order that Maine must achieve carbon neutrality by 2045. Incredibly ambitious and exciting goal that many states and countries around the world are committing to in a similar way, but obviously a bold step forward. We are most focused on how do we reduce our state's emissions by 45% by 2030 and at least 80% by 2050. And last, you just heard a bunch of discussion of this in the last panel, but how do we ensure that Maine people, our industries and communities are resilient to the impacts of climate change? So from our warming oceans, impacts on fisheries, to our rising sea levels, increased flood events, changes for farmers and foresters, we know there's a ton to do to prepare our state to be more resilient, to prepare our industries for change, the change from the weather and the changing climate. So the Climate Council, again, is a 39-member group that's tasked with coming up with a plan. Who's on that council? You can see it on our website at climatecouncil.maine.gov, but it's an assembly of scientists, industry leaders. We have a number of leading folks from the business community, from the head of the Maine Lobstermen's Association and Forest Product Council to Dan Cleveland of Maine Beer Company, to Jesse Perkins, who leads the Chamber of Commerce in Bethel. So a really varied group of folks working on this climate action plan. So the plan is again coming together. There were 6 working groups and then a science and technical subcommittee, all tasked with recommending strategies to achieve Maine's climate goals. So what is our challenge here? So here's a little overview of where our state's emissions come from. Maine is actually unique in that the majority of our emissions are coming from the transportation sector, over 54% from transportation. That is really Maine's toughest nut to crack. We're a rural state. People drive long distances to get to work, to get to school, and it shows from our emissions profile. About 30% come from our buildings in our workplaces, 9% from our industrial sector, and 7% from our electricity sector. So Maine has made pretty significant progress in reducing emissions in our electricity sector, but we have a lot of work to do, especially in our homes and the way we travel. So our Climate Council goals, and I think this really speaks to what this whole theme of this conference has been all about. How do we create jobs and economic opportunity while taking action on climate? Bills believes this can be a win-win, and it's the #1 goal of our climate action plan. Number 2 is to reduce Maine's greenhouse gas emissions. Again, really the core part of the law that we are required to meet. How do we reduce our emissions? How do we meet the goals our state has, the goals that many states around the country and countries around the world have committed to in similar ways? How do we prepare Maine residents, businesses, and communities for the impacts of climate change? And last but not least, how do we ensure that Maine's climate strategies are equitable? This has really been a focal point of our work in the last couple of weeks. We put out a report of an equity assessment of proposals we're currently considering. So from the most vulnerable rural populations to our tribal communities to new Mainers, how do we make sure that we are implementing climate actions that the benefits can be equally felt, from good paying jobs to weatherization strategies, and how do we make sure those who are most vulnerable to climate impacts are protected? So I'm not going to go through sort of all the strategies. I highly encourage you again to go to our website, climatecouncil.maine.gov, to sort of see some of the details. But there are essentially 2 parts of the recommendations. 1, reducing Maine's greenhouse gas emissions through transportation, modernization of buildings, and driving innovation to reduce carbon emissions. Every one of these sectors has incredible engagement with the business community, people getting to work, both businesses and workplaces doing what they can to help improve and also to reduce their operating costs. Second, how do we prepare Maine for climate change impacts? How do we build healthy and resilient communities? This is everything. This is a lot about how do we support communities trying to do the hard work of planning, and from the community level to the regional level to the state level. How do we invest in climate ready infrastructure? The picture on this screen really illustrates the challenges we're seeing, especially in our transportation infrastructure, but wastewater, working waterfront, infrastructure across the board is especially vulnerable to climate impacts, especially if we don't do the hard work to really make them ready. And last but not least, how do we protect Maine's environment and natural resource economies and promote natural climate solutions? So this is everything from how do we protect our forests and preserve them, forest land, farmland, to ensure that it continues to sequester carbon, to how do we protect Maine's natural resource industries that are especially vulnerable to climate impacts. So a ton of work to do. Again, lots of very specific actions proposed that we are currently deliberating on. We love people's feedback. We've gotten thousands of comments from individual Mainers in the business community. So go to the website if you want to see all of the details. Again, December 1, we'll have a specific plan out that will be bold and ambitious. So I'm just going to close by just talking a little bit about the importance of Maine's business community. I would just say that I know that the Maine Climate Table's refrain has been that we can't meet these ambitious targets without the participation and the leadership and innovation of Maine's business community. We know that businesses, whether they are fishermen and farmers or national retailers or new biotech companies, they are on the front lines of climate change impacts every day. Our natural resource industries are especially impacted, but we know that those are also some of the areas where innovation can really lead to new good paying jobs. The forest product sector is especially important in this. New companies like GoLogic that's trying to ramp up a new super insulation plant in Madison, Maine, building a climate friendly insulation product, but using Maine's forests, preserving Maine's forests at the same time. Incredibly exciting. We know that many businesses in Maine, I love what Hannaford has been doing, really leading by example on almost every front of their operations, from reducing their use of harmful greenhouse gas producing refrigerants, to EV charging, to programs for transportation for their workers, to reducing their electricity, to solar installations. We're seeing companies like Hannaford all over the state who are really leading, but also benefiting their bottom line by doing this work. I'm inspired by longstanding traditional companies like the Cranberry Island Co-op, Lobster Co-op, Brooks Trap Mill, who are installing solar on their roofs. Companies across Maine installing EV charging, doing pilot projects to transition their transportation to hybrid or electric. We see companies setting their own emissions reductions targets, from higher education to the ski industry, LL Bean. Again, this is really leading by example, and our work at the state level is not possible without companies like this who are stepping up. We are also seeing really innovative work on adaptation. This is the challenging part, from farmers who are changing their growing seasons and finding new ways to deal with drought or increased storm events, to aquaculture companies like Belmook, who are finding ways to deal with ocean acidification and how it's impacting their oyster farms. So I would just say that the business community has been involved, I think, at every level of the Climate Council, in our working groups, in our as members of our Climate Council itself, as decision makers, and they will be key to the strategy of how we actually implement. One of the strategies that the governor has talked about over the last couple of months is how do we really engage companies at the end of this process in a leadership way? How do we highlight them? So one of the things that we anticipate early next year is to launch a governor's business climate group, to really, again, to highlight those leaders who are really making a significant difference. I want to mention that next week we will be releasing, as part of our Maine Climate Council work, a clean energy economy report. So one of the things the Climate Council was tasked with doing was to release this report to really understand how the transition to a lower carbon economy can benefit Maine, how it can benefit Maine workers and Maine businesses. We are having a webinar, a public webinar next Tuesday at 9 a.m. I highly encourage people to tune in. It is all of our Climate Council meetings and are public. So we will present that report next Tuesday morning. But I will say it won't be shocking, and I know you've spent a lot of time talking about this, but a lot of it is about investing in workers and workforce development. We know that we can grow good paying jobs in Maine. We know that there are industries from solar to offshore wind to efficiency that can offer thousands of good paying jobs in Maine, but we need to have the workers ready for those jobs. We're already seeing, at times some of the new solar projects are importing electricians from Massachusetts. We have, efficiency work that requires high-level skills in refrigerants. So these are traditional trade jobs. They're good-paying jobs. They're jobs that I know that young people who believe in attacking the climate crisis, they are excited to join, but we need to have more and more training opportunities, more and more apprenticeships, more and more pathways to get workers into these careers, especially at a time where thousands of Maine people are dislocated, have lost their jobs. Connecting those workers with these growing industries, with training opportunities is key. So that's really, I would say, it's been a highlight of the governor's economic work, is addressing the gap in workforce and how do we grow good paying jobs, attract new workers from out of state and from in-state to these exciting careers. I would also say that report will talk about how do we invest in innovation and business support, whether it's incentives, infrastructure, industries like offshore wind that offer just a ton of potential for our state. So again, I think that report is exciting, and it really is, again, about the potential win-win for attacking climate change, but also growing our clean energy economy. So I'll just close and say that I again, really appreciate the work of this group over the last couple weeks to focus on how the business community can partner with the state, partner at the local level in dealing with climate issues. We can't do this work without those partnerships, and we can't do this work without the ambition and the commitment of the business community. And I think the good news is the business community understands the urgency. It's Bob Montgomery-Rice just mentioned, we are already seeing changes in the insurance market. Business community leaders, they believe in facts, they believe in science, and the science is clear that climate impacts are coming, they are here, they will impact our future, and the more we can do to prepare for them and mitigate them, the better off we'll all be. So I think on behalf of the governor, we are incredibly grateful for the innovation and the leadership that is really already apparent in Maine. We will look for new ways to partner at every level, from small businesses who are struggling and have too much to do right now, to Maine's leading businesses continue to take the lead. Especially for a state like Maine, we know that we can create good paying jobs and industries and improve the lives of Maine people while we tackle the climate crisis. So again, thank you. Thanks for having me. Thanks for this incredible multiple days of focus on this work. And again, we look forward to a lot more partnership on these issues.
Okay, thank you, Hannah. I've just got one quick question for you. Can you give us a little insight on what might happen next after December? All of this great work has gone into, I guess, the strategies report, and there are things the nonprofit community can do. There are things the state's going to do. There's things the business community. Can you just a quick perspective on what you see happening over the next couple of years by all of us?
I think that is really the point of the plan is to not just create some big thick piece of paper that somebody puts on a shelf, but it is an action plan. And I would say you really just said it well, John. The action plan will be a 4-year roadmap. What do we need to do to start getting Maine on a path to meet our emissions reduction goals and prepare our state? and there are going to be multiple actions. Things, there will be needs for change in regulation and legislation at the state level to implement these actions. But there'll be a lot where it's just, how do we inspire Maine people, Maine communities, and businesses to take advantage of some of the programs that are already out there through the Efficiency Maine Trust? To how do we encourage people to invest in renewable energy, consider alternative transportation? As you saw, transportation is really kind of our big nut. So the action plan will really offer, I think, a roadmap for probably everybody in Maine to engage in some way. There will certainly be work to be done through the legislative process, through the regulatory process in the coming couple years. And those who care about these issues should stay engaged, because nothing is a given. I will also say that finding the resources to make this work happen is going to be crucial. There are some opportunities at the state level that we're looking at to start investing in this work right away. There's already action happening again in the energy sector that I think is exciting. Efficiency Maine is already doing this work. But I would say I'm hopeful that the federal government will engage. There's some exciting action in Congress already, especially coming out of the House, about how does the federal government really partner with the states in a meaningful way to start investing in reducing our emissions, supporting businesses and new industries that are trying to grow and do this work, and supporting our communities who will really need significant investment to do the kind of transitions and planning that they need to do. So hopefully there'll be something in there for everyone, but the plan will require action. It will require action by every one of us for the next 4 years, and every one of us for the next 30 years to really accomplish the goals the state has, but many states, and again, every country around the world is engaging this in some way.
Thank you for that. There's definitely something for everyone to work on over the next 30 years. Well, thank you, Hannah, for being with us today and giving us a great update. And if anybody wants to learn more, there's plenty of material on the website, the Maine Climate Council's website. I haven't read it all yet, but there's a ton of good information there, a lot of great reports. So I encourage also everybody to go there. So thank you once again, Hannah. Again, applause. You can't hear it. The Hannaford Hall is empty right now, but there would be applause if they were here. So thank you so much.
Great. Well, thank you, John, and thanks again to the Maine Climate Table. This has been an inspiring couple weeks.
All right. Thank you. Take care. Okay, Katie, are you there? And can we bring back our?
Oh no, I'm sorry about that. That was part of it.
John, I am here, and I am promoting everyone to panelist.
Okay, so do we have everybody? Let me just do a check off. So we're going to, while we're getting the moderators here, just for a recap, we're going to bring all the moderators back from the sessions we've had over the past 4 weeks, just to get a little bit of perspective, high-level perspective on what they learned, what they saw from their panelists. Welcome, Marty. We've got John Doerr, Kathy Lee.
Good morning.
Adam Lee, no relation. Okay, maybe some. And let's see, is Andy Whitman out there somewhere? Okay, there's Andy. That's good. Okay, and there's Michael. Michael, welcome back. It's been a long time. It's
20 minutes.
20 minutes. So I thought, you all, we've just had some fantastic people on our panels. We've learned a lot. And I want to ask you maybe the one or two things that you've learned, you took away from your panel. I think I'll start just because I had the interview with Charles Colgan on the first day. And I think what I heard from Charles was, and really heard from a lot of the panelists, is there's a time, we've got a fairly narrow time opportunity to move. And if we don't get it right in the next 3 or 4 years, we could lose the opportunity. So that I think I heard almost from everybody, there is this sense of urgency to get moving, and we better get it right. And then I also heard a lot about opportunity. There's a ton of opportunity. And I think I'm going to turn to Adam first, because I mean, the thing that Adam told all of us in his keynote on the first day was, hey folks, we can do this. We've done harder things before. And it really gave, I think it gave all of it, it set a tone of optimism for the whole series. So thank you for that, Adam. It really gave us all a boost. But you also hosted the EV panel, the electric vehicle panel. And of course, you know a thing or two about cars. What did you hear from them? And of course, we heard today again, the transportation sector is the biggest sector of emissions in Maine. What did you hear that gives you optimism for what we can do?
Well, you know, we heard from Jennifer and we heard from, not Philippe, I don't remember the other gentleman's name. Yeah,
I've lost his name too.
You know, there are a lot of innovative programs out there that different states are doing to promote EVs. But in the end, the numbers are still daunting. As you know, we're still at 2%, 1.5%, 2%, 2.5%. And it's going to take a lot of money for incentives, I think, to change that. So I am optimistic in that the product lineup, there's so many innovative cars coming, and the range seems to be, you know, between 200 and 300 miles on all of the new products coming, including trucks and SUVs. But that doesn't guarantee people will buy them. So I'm optimistic that there are products out there, and there are a lot of charging opportunities. But we're going to have to keep pouring money into incentive programs to encourage people to make the switch.
Mm-hmm. Jeff Turner and Barry Woods were your other two panelists, yeah. Of course. Let's see. Who's next? Kathy, I think you had the next panel. You talked to a number of people in the corporate sector that have a reach well beyond Maine. We heard a lot of good news, a lot of interesting things going on. What did you learn from that group?
Yeah, my group, thank you, John, had 4 companies: Ahold Delhaize, which is the parent to Hannaford, Jackson Labs, Sugarloaf USA, and Unum Group. And there were 3 things actually that jumped out at me. The first was that they all said that there's been a real shift in consumer awareness recently, whether it's customers, investors, or employees. Everybody is asking questions, making demands for action, and that matters to them, that they feel the pressure and it's causing them to act. And between the 4 of them, they're really reporting that people want to know from the companies that they're engaged with, whether as employees or investors or consumers, how are they managing climate risks? Are they managing as aggressively as they should? Have they established long-term goals? Are they doing enough? Are they acting with enough sense of urgency? And does this company or employer or future employer share my values? Because if they don't, I'm not sure I want to work here. So it's interesting to hear that from all 4 of them who operate in very different sectors. A second point was that every single business mentioned the parallels between COVID and climate change and the emergency that everybody's seeing and having to respond to with COVID, and how that to them foreshadows what we may be seeing around the globe, but including here in Maine. It was actually Charlie Colgan, when you interviewed him, who said that COVID is revealing systemic risk, and climate change is the same kind of systemic risk is showing up. So people said that some of the lessons they had learned from COVID that they find applicable to climate change are that businesses can be creative. They can act with urgency. They can be flexible. They can create new partnerships, and they can and should diversify. And then the third one that I'll mention is that, and I wish Hannah was here to hear this, but that aggressive government action by the state of Maine makes a difference to them and the level of action that they engage in a number of different ways. But particular examples, some of the companies said that the state's goals were prompting, even though they don't require them to do anything in particular at this moment, they were still prompting them to look at being more aggressive. For those companies that were doing business in multiple states, which I think is all 4 of them, that the approach that they were using in Maine was different, that they had vendors coming to them in Maine offering efficiency measures. They all mentioned the importance of Efficiency Maine, and which grows out of the state's policies and goals, and how they had taken advantage of different programs that Efficiency Maine offers, the technical assistance, the subsidies, and the support, and that has caused them to take action that they're just not doing in other states because the support's not there and the pressure's not there. So those were the 3 big takeaways that I thought were pretty interesting.
And you know, we just heard yet again Sara Lewis talk about the pressure coming from the investment community. So there seems to be an unavoidable groundswell of support for moving on and solving this problem. Thank you, Kathy. Moving on to Andy, you talked to a lot of very interesting people in forestry, agriculture, and fisheries, and you got a particular knack for seeing commonalities. So what did you hear from them?
Well, it was a great panel with Greg Adams from, as some people may recall, from Irving Woodlands, Jenny Tilson Flood from Flood Brothers Dairy Farm, and Bill Mook from Mook Seafood. And I would say the common theme for them was having to sort of deal with today, what they're seeing today in terms of climate change. So that meant, much greater management of environmental risk, and principally on managing issues of actually controlling water, either, in some cases getting water off. They all had issues with the water coming off, more water. The forest trade has to do with the impacts to roads and access to stands and be able to harvest timber. For aquaculture, it was a matter of excessive water actually causing closures because of the risk of bacteria in the water and how that might affect the seafood product they sell to market. And then for farmers, it also is an access issue, too much water on the fields and you can't get in. But an odd twist for ag, which is also getting, potentially having to think about how do you get water on. But all of them then thinking much more intensely about managing that environmental risk with respect to water. Temperature becomes somewhat of an issue for all 3, but it manifests its ways in different kinds of potential risk. And the odd thing that I was aware of, but I didn't think of through slicing through all 3 of these sectors, is the consideration for genetics, in terms of just plain old genetics, old-fashioned genetics of breeding stock, whether it be trees, cows, or shellfish, that better deal with this new climate. So I would sum it up as what we, in sustainability you think of in general anyways, is just how do you intensify the quality of your management and pay more attention to what you're doing in managing these kinds of risks. So it was a great panel. I want to thank that team of 3 again for bringing forward. The one thing I would end on, because Kathy mentioned it, is the food industry, I think, and dairy is more attentive to these issues. I mean, so much so that the dairy industry actually has established a carbon neutral goal for itself to achieve carbon neutrality by 2050. And I highlight that because there's 2 other sectors, the aquaculture and the forestry sector, really have not, as a sector or as an industry, sort of stepped up as aggressively. And I think that's because dairy, being in food, knows the direct pressure of consumers in a way that these 2 other sectors have yet to face.
Thank you, Andy. And I remember some of the attendees that wrote in after your session were amazed at how active foresters and fishers and and farmers are. I mean, they're doing things every day. People had no idea how much they are on the front lines and solving problems. It was very impressive. So Marty, you talked to some folks that were homegrown businesses that have grown from small businesses to pretty formidable businesses, but Maine-grown businesses nevertheless. They're very pragmatic kind of people. What did you hear from them? Common themes.
Yeah, thanks, John. Really interesting panel. Was pleased and honored to have Shanna Cox from the Lewiston Auburn Chamber of Commerce, Sean Moody from Moody's Collision Centers, Gene Geiger from Geiger Brothers, and Phil Coop from Revision Energy talking about Maine businesses on Main Street. I think thematically, one thing, start with a really nice positive thing, was Shanna mentioned just opportunity to take on changes and projects in the pandemic that you never would have conceived of as being viable otherwise. And, you know, don't waste a good crisis, wherever that line goes. You know, Sean Moody, I think, in particular, mentioned the value of employee suggestions and in improving the sustainability of the business. They have 14 locations, and they've really done well and been focused on making improvements all the time and really drawing on the ideas that come from their employees. A theme that came from Gene at Geiger Brothers that I really love is how sustainability flows through the supply chain. So, and I think that's true. You know, sustainability flows from company to company. If you want to do business with Geiger Brothers, then you need to supply them with a product that they can believe in, and they're going to be checking on that, and so it helps. And Phil Coop from Revision Energy. You know, this is obviously Phil is a prominent E2 Tech member and a member of our board, and I don't think I'm enable screen sharing here, so maybe this will show up. So this is shutdown helps speed shift to clean energy. This is a headline in today's Wall Street Journal. So, you know, obviously there's I think something that's super compelling in the pandemic right now is that investors are looking for opportunities, and they want to put money to work in clean energy development. And so I think that's just incredibly positive and puts Maine in a good place. You know, just asking around in a couple of kind of local interactions here in preparation for this panel, I've heard everything from a friend that runs a trucking company and has really been growing a business to people saying, look, we're in Maine, we won the lottery here, we've got we've got everything that we need to take advantage, if you can think of it that way, of the pandemic. And then I guess the final thought was I have a good friend who owns a convenience store here in Biddeford, and he says, oh, business is off the charts, everyone's drinking at home. So there you have it.
That's a good point, Marty. Thank you for that. Yeah, your panelists, I mean, it was they just were anxious to get to work. I mean, of course, they're already doing things, but they're ready to go, and it was very encouraging. Regardless of politics, I might say they were ready to go. John Doerr, let's see how to say this. I said this right before your session. I'm an ecologist, but I never knew workforce development could be so interesting. It needs a new name because, and you heard Andrew talk about it earlier in the session today. And Marty, back to your, yes, let no good crisis go to waste. I mean, we've got a climate issue here that presents an enormous opportunity to address equity issues, create well-paying jobs. And John led a great panel, fascinating panel on this. John, I know this is your subject anyway, but what do we need to take away from that? What do we need to get in our brains about this opportunity?
Well, John, I was most encouraged by our panel, who brought together, the panel brought together on the employer side, people who are looking for workers, people who are looking to get the job done, with the suppliers of education and training. And I was encouraged. There was such a spirit of cooperation. But learning immediately from employers, the crux of the problem right now is the ability to attract labor, the ability to find labor that's got high level of productivity to be able to do this kind of work. We have a serious set of challenges right now in terms of attracting an adequate number of workers and bringing up workers' skill sets to a level where they become highly productive. It could well become the binding constraint to the growth of the renewables industry, which has an amazing alignment right now between public policy, which is very favorable towards this industry, and market policies in the form of capital markets, consumer markets, all moving in the right direction. But the binding constraint, well, may be the availability of labor. There's only one way, I think, that we can ultimately solve this problem, and that's a high degree of collaboration between the suppliers of education and training and employers on the demand side. We have at this point in time more flexibility in terms of what education and training providers are willing to do to work collaboratively with employers to design programs and curriculum content that will be much more aligned with a very dynamic, moving technology and marketplace, if you will, for the renewables industry. We have resources that have been dedicated for that purpose and that are more flexible than they have been before. The opportunity exists, I think, much as we do for many of the other inputs that any industry relies on, is the need to build a reliable supply chain. And while the problems in Maine of an aging workforce and workers retiring, particularly high-skilled workers, high-wage workers retiring, has not gone away, there remain pockets of individuals who've been left behind. And we've got to make some extraordinary efforts to reach out and help these people enter into this industry, acquire the skill sets. It will require some patience from employers. It will require some different postures and more supportive postures. And I think we have to recognize that we're asking employers to take more risks. And so we have to have public policy that compensates for the risk that we're asking these employers to assume. But make no mistake, workforce development should be a lot more than interesting, because when you look at most industries, 60 to 80% of their business expense and costs fall into wages and salary and compensation. And so ultimately, the ability of an industry to become profitable and sustainable is going to rely on the efficacy of their workforce development policy. And I think we have a huge opportunity here, bottom line, to affect not only positive environmental outcomes, but to use this occasion to effectively integrate our economic and social justice objectives in terms of what we pay and the advancement opportunities that we provide for people who have been on the margin, on the edge for a long time. So I think that was our discussion back and forth. I was most encouraged on the openness of the employers, Vaughn Woodruff and Source Renewables and Matt Kearns of Longitudinal Energy. Much greater openness and much greater receptivity to a constructive, open source kind of workforce development policy. In the past, this has always been antagonistic and adversarial. This has become a little bit more harmonious in the discussion we've had between what the community colleges are willing to do. Dan Bellier was there, their Chief Workforce Development Officer. Gilda Nardone of New Ventures, Maine. These people are willing to work together and I think bring us into a better future in terms of creating both effective climate change outcomes as well as human capital outcomes that will ultimately strengthen Maine in a very positive direction.
Thank you. And just while I'm listening to you, I would encourage everyone to go watch all of the panels that are online, but the workforce development taught me a lot. And maybe just to tie a point from Dan Bellier back to what Kathy said earlier about COVID, because Dan talked about how creative he's had to get with his training programs because of COVID. And he's figured out things that probably would have taken a decade to figure out. He figured it out in a couple of months. So there's a lot of innovation going on right now because of COVID, I guess a sort of silver lining. So thank you, John. And turning to Michael, Michael, we just heard from John that there's a limited resource called human capital. You just had a panel about another limited resource, which is capital, money capital. What did you hear from your group this morning?
Thanks, John. You know, what I heard was that there's going to be a really significant amount of investment over the next decade. So if this is a gathering of folks who are interested in the business opportunities around these various climate related activities, there's a lot to pay attention to here, I would say. Adam references the number of EVs that are going to come into the market. The modeling that the Maine Climate Council is doing to try and get to its targets by 2030 contemplates a massive shift to electric vehicles from internal combustion engines. That seems probably a little more speculative to someone like Adam, who's in the business, or someone like me, who's running a program right now to provide incentives for that, because we can see the numbers are kind of small. It's still early days. But I also manage a program at Efficiency Maine to promote heat pumps and heat pump water heaters. And that program is probably 10 years ahead of where we are with EVs. And I'm pretty excited to report that we are leading the country in that transition to electrification. And we're selling them now by the tens of thousands per year. So if you're a business person out there and you're wondering, what does this have to do with us? Like, where's the business opportunity here? Tens of thousands of heat pumps over the next decade to get to the target that we need to is going to be more than $1 billion invested just in heat pumps to heat our homes and businesses in the state. So there's something. Some of it is going to benefit from some of the kinds of subsidy that Adam referenced. You know, do we need programs that will help support this? The answer is yes. Certainly in the beginning you do. I think it may be less than you know, it's hard to keep perspective when you're in the beginning of something like that, because you're completely dominant. Your frame of mind is dominated by what you know is the current context. But just look how fast these things have changed over the period. I mean, a decade is a pretty long time. A decade ago, we were just first seeing the first smartphones, and now they're everywhere. And I think we're seeing something similar happen with our heating systems. And one of the things we know about cars and heating systems is they do have a finite lifespan. They don't last forever. And when the old one croaks, we go out and buy a new one. And Mainers do this every year dutifully without really batting an eye. I mean, I don't mean to suggest that it's an insignificant purchase to purchase a new heating system or a new car, but we do manage. We do it. And sometimes it's from savings, sometimes it's from financing. Sometimes it gets a boost from some kind of a government policy-driven incentive program, like the ones Efficiency Maine runs. But the incremental cost, we're lucky, I think, that the incremental cost of these low and no carbon solutions is not that significant, and it's dropping. So while Adam is having to stare into the face of the incremental cost of an EV today compared to a comparable internal combustion engine, and it's kind of a scary looking incremental cost, the economies of scale that are resulting from mass producing these batteries, and the battery is half the cost of that new widget, is really dropping pretty precipitously. And so I'm pretty hopeful that by the end of this decade, it won't be that much more expensive for these cars. These will just be the thing we buy every time we go to buy a new thing when our old one dies. Just like now, you just get a smartphone. You're not going to go back to the other kind of phone. And that's the way it's going to be. So if I were a business person listening to this, I would think that's a pretty interesting set of opportunities, either as a consumer or as a vendor of goods and services. And, you know, what John's talking about in terms of workforce, there are more than 500 registered vendors who sell heat pumps now. Pretty sure 10 years ago, there were about 2. And so these are small businesses that are doing incredibly well installing these tens of thousands. This year, we're going to install about 17,000 heat pumps in the state of Maine. So you're now talking about economies of scale. That's something to build a business around, and I think we should be excited about that opportunity.
Thank you, Michael. That's all well put. We're running out of time, so I'm not going to get to ask the second question the way I wanted to. I'm just going to go around and ask, what's the one thing you'd like to leave us with? What's the one point you'd like to make for moving forward? And I'll just go in the same order that I went. Adam, what's one thing we should know moving forward? And you're on mute. There we go.
I would say it's harder than you may think to get people to change their buying habits. Cell phones were a new product that didn't exist, and everyone decided it somehow made their life better. People are in the habit of buying gas-powered cars and pulling into a gas station. Getting them to change that view, it's not just price, it's also just getting them comfortable. We need to keep having campaigns to promote how easy it is to own an electric car and how the cost of ownership is so much less than a gasoline-powered car. There are tremendous savings. After you bought the car, there's no oil changes, all these things. So I would just plant that seed. These are things we need to be doing now.
Yeah, there's definitely a marketing challenge. I mean, I'm in this field and I learned a ton about EVs that day. And like I said, if you had a blue leaf on the lot, I was coming right over. I need to see Michael first because I want Efficiency Maine to help me out.
And I have a blue leaf, so you can test drive mine.
Okay. Oh, that's good. Thank you. Yeah. Kathy, one point to leave us with.
I want to echo something that John brought up. And that is that COVID has laid bare the disparities of impacts based on race, ethnicity, income. And I think we need to keep in mind that climate is already having those same disparate impacts on people. So as we think about how we adopt policies, how we move forward, we shouldn't lose sight of that sad reality. And I think just also echoing something Michael said, that if businesses put a climate lens on their activities, as they think about business, think about climate and the future risks and the opportunities, and then be ready to move.
Thank you, Kathy. Good points. Andy, so one message for us to take away.
Yeah, I think it's, I mean, just based on what I know, the sectors that were my panel, but from also what people are saying, the two hard things actually are the finding, redirecting investment capital, and the other is helping people make the psychological mental transition. We have to do things differently. Mainers, as much as anybody else in the face of the earth, don't like the change. But they're also innovative, hardworking, and have made change before. So I think those 2 points, where's the capital coming from, and how do we help people get momentum in that change is going to be our biggest challenge.
Mm-hmm. Good points. Marty?
Adaptation is opportunity. Massive market shift and is always going to create a chance to do some new things. E2 Tech, we're really focused on building a more diverse workforce, and our members are hiring. We have any number of job opportunities that we're looking to fill, and also have a really good pipeline to, as I mentioned, and this goes to what John has been saying. I'm working in particular with a young renewables energy engineer named Francis Twaku. I'm looking for a job for him. And if you are hiring, let me know. We'll get him placed with an E2 Tech or one of your companies. It's really fun working on that project.
That's great. John Doerr.
Clearly, incentive and public incentives and pricing will stimulate the growth of this industry, whether it be electric vehicles or heat pumps. We will see more of it. However, if we don't pay attention to supplying those growing industries with a stream of productive workers, we may well run into binding constraints and fall short of meeting the potential for job creation and rebuilding an economy.
A word of warning, word of caution. Michael.
Well, I think for me, the big takeaway is back to more of a macro level issue, less what we've been talking about for the last hour, and about the challenge ahead with the grid. John pointed out the potentially limiting factor of the workforce. Another potential limiting factor is the grid, because all this electrification that we're talking about needs to be delivered to us reliably and affordably across a set of infrastructure that needs to double or triple in size. I think we can do it, and I think we have to do it, but I think we should all be mindful that we need to adopt policies and pay for that shift in our infrastructure, and that's going to be a big challenge.
Thank you, Michael. And we're 1 minute, 2 minutes over according to my clock. So I'll just say thank you to all of you for leading your panels through great discussions. I certainly learned a lot. I think everybody that tuned in learned a lot. You're all inspirational to me. So I've enjoyed working with you, and I know many of you I'll continue to work with. So on behalf of all of our audience for the past 4 weeks, thank you all, and keep up the good work. We have a lot to do.
You did a great job with this, John, Kathy, team. This was a lot of fun. Nicely done.
Right. Thank
Thank
you
you,
all.
John and Kathy.
Thanks. Bye,
Cheers.
everybody.
Bye-bye.